The cryptocurrency industry has recently seen a series of bank failures that have raised concerns and caused investors to withdraw their deposits. On Wednesday, Silvergate Capital, one of the most important creditors in the crypto industry, announced its closure and liquidation. This was followed by the collapse of the Silicon Valley Bank, which specializes in technology startups, on Friday. More than $42 billion was withdrawn from the bank after it announced a $2.25 billion capital raise for balance sheet strengthening. The recent events have caused the closure of the Signature Bank as well, a bank that also focuses on crypto lending, citing possible systemic risk. The repercussions of these bank failures are yet to be seen, and it remains to be seen if the market believes that the Silicon Valley Bank's bankruptcy was an isolated event. These bank failures have affected the cryptocurrency industry, especially since Silvergate and Signature are the two most significant financing banks for crypto companies. Nearly half of all American venture capital-backed startups, including digital asset companies and venture capital funds, kept their cash at Silicon Valley Bank. Signature Bank, which has FDIC insurance, had $110.36 billion in assets and $88.59 billion in deposits on December 31st, according to a separate statement by the New York Department of Financial Services. The U.S. Treasury and the Fed announced emergency financing measures for the banking sector over the weekend after the collapse of the SVB. Additionally, the White House has stated that it will provide compensation to the depositors of Signature and Silvergate, and SVB customers can access their deposits from Monday. The market reacted positively to the decisive and quick actions, and a minor rally started on the crypto markets. Stablecoins, the most stable branch of the cryptocurrency ecosystem, were also affected by the bank failures and general uncertainty. The vulnerabilities of stablecoins were exposed during the market slump last year, starting with the collapse of Terra USD in May. Regulators have also targeted stablecoins in recent weeks, with huge outflows from Binance's dollar-denominated stablecoin BUSD after the Securities and Exchange Commission began investigating the coin's issuer, Paxos. Over the weekend, confidence in the sector was shaken again, as the second most liquid dollar-denominated stablecoin, USDC, lost its parity with the dollar and fell below 87 cents at one point on Saturday, after its issuer, Circle, admitted to holding $3.3 billion at the SVB. Despite the many questions surrounding the Tether's business practices, it has become one of the cryptocurrencies that investors are fleeing to in the current banking crisis. The bank failures of the three largest crypto-friendly banks in just a few days have caused serious problems for the world's largest cryptocurrency, Bitcoin, which has a market value of $422 billion. The Silvergate Exchange Network, SEN, and Signature's Signet were real-time payment platforms that allowed commercial customers and users to make payments 24 hours a day, 7 days a week, through their own instant settlement services. The loss of these two platforms will lead to a deterioration in liquidity in the Bitcoin market and the cryptocurrency market as a whole, according to Nick Carter, a Castle Island Ventures employee. The expert hopes that other banks will enter the market to fill the void left by the SEN and Signet. Although Carter believes that the Fed's intervention to guarantee SVB depositors could prevent a larger bank run today, it is still very disheartening to see the three largest crypto-friendly banks in such a state in just a few days. According to Mike Bicella, a longtime player in the crypto space, many in the industry are turning to Mercury and Axos, two other banks specialized in financing startups. Meanwhile, Circle has already announced that it will be moving its assets to BNY Mellon, now that Signature Bank is closing its doors. North America is a tough terrain for crypto banking in the short term, emphasized Bicella. Could this be good news for Bitcoin? Despite the liquidity challenges, there are analysts who are very optimistic about the impact of the collapse of the three financial institutions on the assessment and future of Bitcoin. Silicon Valley Bank, the country's 18th largest bank, collapsed, With it, we learned that last year's record sale of U.S. Treasury bonds caused billions of dollars of unrealized losses in the banking sector, providing another example that in the partial reserve banking system there are no depositors, only creditors, wrote researcher Nick Bhatia and market analyst Joe Consorti in the latest issue of the Bitcoin Layer newsletter. Partial reserve requirement. Banks are not required to deposit an amount equal to their deposits with the central bank. Only a few percent are required. The Fed's aggressive interest rate hikes and balance sheet reductions caused a historic bank failure, promoting real-time advertising for self-care via Bitcoin, Bhatia and Consorti added. According to these experts, the bank failure and crisis described above reinforce the perception that customers' funds are not as secure in regulated banks as they are led to believe. It was precisely the growing popularity of this perception that enabled the spread of the concept of Bitcoin and decentralized peer-to-peer networks in the past, and now uncertainties against the traditional system may once again come to the fore, according to analysts. Not your keys, not your coins, is a lesson that seems to need to be learned over and over again, as history finds a way to repeat itself, said Mike Fay, author of Blockchain Reaction, in his latest article for Seeking Alpha, discussing investor lessons from the collapse of SVB in Silvergate Capital and the 2013 Cyprus banking crisis. Regulatory authorities generally intervene after bank runs, taking control of deposits. To solve the 2013 Cyprus banking crisis, regulatory authorities seized customers' accounts and Germany donated around $13 billion in exchange for a one-time tax on bank deposits to raise another $7.5 billion to rescue the banking sector. While the measures taken to address the SVB crisis are not yet as strict as those in the Cyprus case, the similarity between the two cases lies in the erosion of trust in the traditional banking system. As the Cyprus banking crisis unfolded in March 2013, the price of Bitcoin rose sharply, increasing 178% to $93 that month and reaching a record of $265 in May 2013. It's very easy to sit comfortably in the Western world with the perception of safe and regulated banking institutions, and not understand why anyone would feel compelled to buy assets that exist outside of this world. However, history shows that banks are capable of mishandling things and making bad decisions, Fay concluded his article. In recent days, the cryptocurrency industry has been rocked by a series of bank failures, including those of Silvergate Capital, Silicon Valley Bank, and Signature Bank. These banks were significant financing sources for crypto companies, and their failures have raised concerns among investors and caused many to withdraw their deposits. The repercussions of these failures are yet to be fully understood, and it remains to be seen if the market believes that Silicon Valley Bank's bankruptcy was an isolated event. Stablecoins, which are considered the most stable branch of the cryptocurrency ecosystem, have also been affected by the bank failures and general uncertainty. Despite the challenges, some analysts remain optimistic about the impact of the collapses on the assessment and future of Bitcoin, as they believe it reinforces the perception that customers' funds are not as secure in regulated banks as they are led to believe. The similarities between these bank failures and the 2013 Cyprus banking crisis highlight the erosion of trust in the traditional banking system and may drive more investors towards assets that exist outside of this system, like Bitcoin. Thanks for watching. If you enjoyed this video, don't forget to like and subscribe to our channel for more content like this. And be sure to hit the notification bell so you don't miss any new uploads. We appreciate your support and hope to see you again soon.